Assalamualaikum and hello everyone. Welcome back to my channel. Today we will be discussing question on receivable, which is under MFRS 9, which is equivalent to IFRS 9 financial instruments, and we are going to discuss question related to FAR 210, the exam question January 2018. Okay, let's start. Let's look at the question. This is question 3A, January 2018. You have Chantik Design, a manufacturer of a female attires, which has its own factory in Sri Iskandar, and they sell products and that are on cash and credit basis. So they have this cash and credit basis, right? Which is the important part that you need to highlight related to your purchase, right? Let's go on and read the question till the end. Okay, there is some transaction related to the sales of goods, right? You have on 11 of June, you sold goods to on credit to Hazra Fashion, and that the good worth 15,000, and there was this credit term offered 210 at 90 days. Yeah, 2% discount will be given if you pay within 10 days. And for Hazra Fashion, which is the first accounts receivable that you have, and that is a financial asset, on 11 of June, you receive a check after 8 days. So this one, within this period, this is less than 10 days, and meaning that you are entitled to this 2% cash discount, and you receive this payment from Hazra to amount of 14,700 for settlement of the outstanding account that were created due to the credit sales. So this 14,700 means this is already net of discount. Next, so you should know what to record on 11 of June. I'll show you later, but just focus on the question. Sold goods on credit to Angul. So this is another different company, and this company, we use a different color, which is Angul Boutique, worth 30,000, and there is a trade discount of 2%. The credit term was 550, net 50. Yeah, so the trade discount was given. 11 of November, so meaning that you have one more trade receivable, Angul Boutique. 11 of November, you have another customer that purchased goods from your company on credit, so meaning that the sale is on credit to your point of view, and that was 7,000, and you are given 3% discount. So this one is not going to be the price that you are going to recognize, but this has to be after you net off the discount, the trade discount. Same goes for this one. This 30,000 should also be shown later after you net off your trade discount. How much? You should have 2% discount, and here should be 3. Let us look at the requirement of your question. All right. You are asked to, based on MFRS 139, explain whether the business transaction on 11 of June, which is this one, 14 of October here, related to Angul, Hazra Fashion on 11 of June, and 11 of November 2017 that relates to Huayna. Does it give rise to financial asset? And earlier on, I have informed you that there were accounts receivable created due to the credit sales, and you know that accounts receivable is one example of financial asset, so it gives rise to financial asset. Right, let's go to the next one. So this is just to give you some idea of what is the journal entry. You're not required to do this. I'm just showing this as a bonus answer, where these are the amount that you will recognize in terms of each sale, right, on the date 11th of June, 14th of October, and 11th of November for different account receivable. But this is our focus. You are asked whether or not it gives rise to financial asset. So we need to recognize only when there is a financial asset. So let's look at Chanti Design, our reporting entity. The company is the seller. And what happened is during that year, they sell goods on credit. Where goods were delivered, it was received by the buyer or the customer. Who are the buyer? The customer. And MFRS 9, they are called another entity. Yeah, third party, another entity. The first one is Hazra Fashion. The transaction took place on 11th of June to the amount of 15,000. Second one is Angun Boutique on 14th of October at 29,400. And the last one is Waina Fashion that took place on 11th of November for 6790. So we'll see how we calculate that, but that was net of trade discount. And these three entities are called trade receivable. And as you know, trade receivable, that is actually a transaction which are giving rise to financial asset. So it is relevant. Why? Because the credit sale transaction create contractual right to receive cash. Here, because you have sold the goods to your customer, you are Chanti Design. When you sold the goods, you now have the right to receive cash from your customer, which is trade receivable. So therefore, you have a potential to receive economic benefits because the performance obligation, which is the sale of goods, were delivered and received by the buyer. That has been met. And that amount of 15,000, 29,400, and 6,790 are deemed to be certain and measured at the respective amount, and that is what we meant by faithfully represented. So this one is related to the conceptual framework recognition criteria for asset in the revised framework. Next, this is the previous slide is not the answer, but what was like some kind of planning for you to understand. This is the answer. So you need to write that in sentence. So you need to mention that why you recognize as financial asset, which transaction. So here all three transaction should be recognized because they are relevant. Why? Because credit sales transaction give rise to the financial asset, which is called accounts receivable or trade receivable. And this is because there is a contractual right to receive cash or another financial asset. So you have the right to receive asset, cash, because you have sold goods and delivered the goods to your customer, the three customers. And that are the so-called Hazra Fashion, Angun Boutique, and Dupuaina Fashion, respectively. And therefore, they have given you, which is referring you to as Chanti Design, but the potential to receive future economic benefits in the form of cash that will flow to the reporting entity. That is a cash inflow. Whenever the performance obligation is met, we are expected or to have received that cash flow, right? So products will receive. So we are also expect to receive this from our customer. So our customer here is not Reka, but just relating to by those customers. So I just delete this because there was a mistake here. Just ignore this by these customer, right? This customer refers to the three customer that you have, which is Hazra Fashion, Ango Boutique, and Hawaii. Transactions are said to have faithfully been represented. The first one is they are said to be relevant. Why? Because the amounts that are the account receivable from these three entities are deemed to be certain, and therefore they are said to be measured reliably at 15,000, 29,400, and 6,790 respectively. Okay, that was for the first question. Next, Explain how Cantik Design should measure the amount to be recorded for each sale transaction. How should you measure the amount? So amount, according to MFRS 9, this is from this lecture, amount recorded for each sale transaction should be based on the gross invoice amount, less trade discount, less allowances given, and less sales and service tax, right? You will put that in sentence, and therefore you should mention what are the amount of receivable being recognized, because that is for each sale. For each sale, these are the amount based on the invoice price for the first one. The second one, it was based on selling price or invoice price less the trade discount. Same goes for the third one, why not fashion? So that was the separate for each sale transaction, but the total is 51,190. Next. Based on the transaction above, you are to decide should Cantik Design, which is a reporting entity, should Cantik Design, so Cantik Design refers to reporting entity. Should they recognize, or the company recognize, Hazra Fashion, which is the another entity, and recognize from its account receivable, and this refers to financial asset, account receivable. So before you start answering the question, why not we do a little revision on the lecture? Recall from the lecture, if you were to derecognize or to exclude or to remove or to eliminate a financial asset, you need to fulfill one of these requirements under MFRS 9, where the first one, either one of these two, I'm talking about the first one, as the entity's contractual rights to the cash flow expired. So if you can recall, in our case, earlier on I mentioned that Hazra Design has paid in full, where they paid at 14,700 after given a discount 300. So there was a full settlement. So the answer to this question is actually yes. Why? Because of the full settlement, which means that contractual right to the cash flow has now expired on behalf of Cantik Design. And if they still do not pay, or if there are still amount remaining unpaid, that means you shouldn't derecognize. You should not derecognize. It means you have to continue to recognize. That was the first one. Or if the entity has transferred the right, we refer to Cantik Design. Maybe Cantik Design has transferred the right to collect the cash flow to another third party. They instead ask the debt collector to collect on their behalf, and they transfer all the risks and rewards or ownership of the financial asset, let's say Hazra Design, to that particular debt collector or the third party, or to a bank, for example. So if this happen, right, if this does not happen but the second one happened, you can also have your financial asset being derecognized. However, if it's not the case here, the right has not been transferred, the risk and reward has not been transferred, do not derecognize. So in our case, we are here. We are going to derecognize. How do you write the sentence? This is how we write the sentence. So according to MFRS 9, you need to put the principle first. The reporting entity shall derecognize financial asset. Here is Hazra Design, right? Or a portion of it, when and only when, right? When and only when the contractual right to the cash flow from the financial asset expire. So in our case, I say yes. Let me show you what is the journal entry that has taken place. So on the 11th of June, there was a recognition of account receivable. There was a financial asset being recognized. However, in the same month, 19th of June, there was a derecognition. Because if you see here, at first, you have an increase. But later on, there was a total reduction where it gives the amount of 0. So meaning that there are no more payment that need to be met because account receivable balance from Hazra Fashion is 0. So no more rights to collect cash flow. For the second part, it's not relevant because we are focusing on the first part, because this is enough to be recognized. So therefore, the second part, you still need to mention the transfer of rights and the risks and rewards are being transferred, but here none. Then you need to make your conclusion whether should you derecognize, giving the reason why. So Cantik Design should derecognize Hazra Fashion. Why? Because the contractual right to receive the cash flow of 14,700 has expired. When does it expire? When you receive this cash, or when you debit your bank and you credit your account receivable. So expired means the contractual rights to receive cash has expired when Hazra fully paid. If let's say here what was paid was just 10,000, so it was not yet expired. So that was on happened on 19th of June because they fully paid. If that is not being fully paid, so it does not expire. Yeah? So you can make use of this, this diagram that I have shared with you. Yeah, you can see this again. Maybe you can want to have it, save as yours, right? So you can use this diagram as a decision diagram. Okay, we go to the next part, which is question 3D. And question 3D is on subsequent measurement. So let's look at Cantik Design again. They prepare financial statement for the year ended 31st of December 2017. That is the year end. And you have the total balance on that date of account receivable to be 80,000. So that 80,000 is the balance before adjustment as at 31st of December. As at 31st of December. At this date, the total balance was 80,000. So the balance of allowance for impairment of receivable, I will use this AFITR as a short or acronym for that. Yeah. On 1st of January, which is the beginning of the year, was 3,000. Right? So what we're going to do now is we need to recall that this one is related to subsequent measurement. So you have already provided some allowance for impairment of 3,000. This was from your previous years maybe. You estimate and account for the expected credit loss, and that is called loss allowance of 3,000. So this 3,000 is the loss allowance that you have earlier made, maybe from your expected credit loss, or ECL, and you have that loss allowance of 3,000. Therefore, the allowance method is used to account for this impairment loss of accounts receivable. In this question, you are just given the 3% as the loss allowance. In certain question, you may have different percentage depending on the past due accounts that has been already being allocated according to the aging of account receivable. So we're going to see whether the allowance that you have earlier made, do we need to raise the allowance? Is there any increase or is there any decrease that we need to adjust to our allowance account? Oopsie. Okay. So that was what happened. So during the current year, 1,000 was written off as bad debt. In addition, 28th of December 2017, a receivable of 8,000, which was previously recognized as bad debt, has been paid. So you will see that these are relating to bad debts and recovery of bad debt. Right? No records were being made. You are asked to propose to the management of Cantik Design for the amount to be disclosed in the SOPL. Propose, meaning that right by way of notes, the amount that you need to disclose in SOPL, how much will it be, and also the amount to be shown in SOP, or Statement of Financial Position, as at 31st of December 2017. Okay, so you have that 3,000, which is the balance, and that 1,000 is the amount written off as bad debt. This 800 is your bad debts that you recovered, meaning that previously you write off as bad, but now it becomes good debts. And you are now trying to put back the account receivable. You do not know who is the person or the company of this 800 back to the lease of account receivable. But no record has been made. So you need to make the record. Before you can propose to the management, you can do a few journal first so that you see the journal entries, and then you can propose your whatever advice. So number one is to do the journal entry related to bad debts. So I've done this here for you. Yeah, journal entry debit allowance, credit account receivable. So there was a decrease in the allowance account here. A decrease. And remember the starting point is this 3,000. So there was a decrease. Second one, there was a bad debts recovered. Yeah, so this one, bad debts recovered. There are two entries you can see here. One is to record the bad debts being recovered. This one, right? Which is you reinstate the bad debts that you recovered. And second one is to record the payment. So this has been done as well. And that has increased the account receivable, right? The next one is that you need to look at how much do you need to recognize as decrease or increase in allowance. So to do this, what you will do is you're going to take this, minus this, you can see the signage that I use, and minus 800, right? And you will need to do that later because you need to first determine what is the expected credit loss allowance for this year based on that 3%. So we'll KIV this, and you will be doing that later, right? So we just need to do some calculation first, right? So, but the working has been shown here. So these are I copy paste the journal entry in the previous slide here. Let's see, what do? We need to provide advice. To provide advice, you normally put them in the form of statement. You will not provide advice by giving debit credit. You are going to put that in a form of table. So this is the table. This is not the table. This is just the working to get the table. Number one, you will have to prepare the statement of allowance or the movement of allowance of impairment of traceable. First, put the balance. Balance was given, and that balance given, if I'm not mistaken, need to check. The balance was 3,000. The balance was 3,000, and you have to do the second transaction. If you can go and refer to this journal entry here. This journal entry that you prepare can help you with the statement. So you will have to take off the bad debts because you debit your allowance. Remember, when you debit, that was actually a reduction. Then you need to record the recovery of bad debt. Recovery. So there was again some increase. And now the third thing that you need to do is to calculate what are the expected credit loss for that year. So here you can see that there is no journal entry for this because this is the allowance balance for this year. How do you get 2370? You will take 3% as given in the question, and this 80,000 is your account receivable balance given earlier before the adjustment, and this 1,000 is the bad debt that you have already adjusted here. So when you adjust here, that was actually reducing your account receivable, the bad debts. So that will be the one that you include here. Next is that you need to total up these three figures here because you want to find what is the changes in your allowance account. So if you total up that three figure, the one here, you have 2,800, and you need to compare this with the balance CD here, or the balance at the end of the year. And there was a reduction, right? A reduction of how much? 430. And that reduction of 430 is the one that you will consider as a decrease, or the one that you need to go and reduce to your statement of profit or loss under your other income. So what is the journal entry? This is our last journal entry, as I said earlier. Debit allowance for impairment, trade receivables 430, and credit the statement of profit or loss, and this is under your other income, right? How much? 430. If let's say you have an increase, maybe here is 2370, but here was 2000, let's say here is 2000. So the difference of 370, assuming here 2000, that one will be an increase. So if for the increase, you will have a journal entry, which is the reverse of this, right? So you will be doing that in other question. So there is a reduction in loss allowance. How much? 430, and that will have to be recognized as other income in the SOPL as follows. So you are advising your directors that they should recognize this loss allowance as part of their other income. Loss allowance or decrease in allowance for impairment of 430. Put in the statement of profit or loss. Put them under other income. Next. And also you need to go and advise regarding, or propose the directors regarding, what is the net realizable value of the account receivable to be shown in the statement of financial position, and it would be 79,000, where 1,000 here refers to bad debt, and this is referring to the bad debts that you recovered. And do not forget, if possible, please also include your bank balance. And in our case, no other bank balance is given, so we assume bank balance is 800. Why 800? Due to the journal entry related to recovery of bad debts. Recovery of bad debt, debit, bank, credit account, receivable. So this will be giving an extra 800. Allowance for impairment is taken from the statement of allowance earlier, and yet therefore your net realizable value is 76,630. And this is the allowance that we have taken and put in our statement of allowance. So you need to show the current asset section. Bank, I'm just showing for some effect for cash flow later, right? So with that, I thank you for watching. I'll see you, and I will see you. Keep practicing to get better each day. With that, Assalamualaikum, and have a nice day ahead. Stay calm, stay safe.